Friends, we all have gathered here today to understand by taking a deeper dive into the budget that was presented yesterday by the Honorable Finance Minister, Srimati Nirmala Sitharaman. Just day before yesterday, the government released something called as the Economic Survey report of 2023, wherein on several parameters, several financial parameters, the report goes on to say that India has performed exceedingly well. Where we stood at the bottom 5 in terms of the developing economies 10 years back, we've now come and we are now in the top 5 of the economies in the world. And even IMF has went on to say by 2027, we have the capacity to beat even Japan and Germany. This economic survey report also spoke on several other factors as to how, in spite of one after the other global turbulences, immediately after pandemic, we had the recession that was faced by Europe, we have the war, multiple global turbulences and disturbances, and in spite of that, how India has performed and has stood strong ground. And in yesterday's budget, of course, it was a budget that was looked upon by almost everyone in the world, especially because next year we have the elections, right? So there was a lot of expectations from the people of the country, especially the middle class people. And we have also seen how the budget was a balanced budget. So today's program is all about trying to understand what this budget was all about, what is in store for you and I, whether we are salaried people, whether we are businessmen, whether we are students for that matter, what is in store for us. So with this brief background, let me now welcome on stage the President of FKCCI, Mr. B.V. Gopal Reddy, and I request the President to kindly escort today's dignitaries and speakers, C.A. Pankaj Sancheti, Mr. Deepak Kumar Jain, Ravindra Krishnappa, and Swapnesh Maru. I also request our Senior Vice President and immediate past President, Ramesh Chandra Lahoti and I.S. Prasad, respectively, to join us as well. Friends, today's discussion is split into 2 different formats. The first format would be a monologue by all of our 4 expert speakers, each of them having experience in their own fields, be it direct taxes, indirect taxes. We have experts from the industry as well as economists. So the second sector of today's discussion would be a panel discussion wherein certain important questions which would be relevant for all of us as participants, all of us as businessmen as well as students would be very, very important. So without further ado, may I now request the President of FKCCI to kindly present his welcome address. Over to you, B.V. Gopal Reddy, sir.
Ellargu namaskara. Deepak Kumar Jain B, Founder Director, Accolade Advisors Private Limited and IndiaGST.com. Pankaj Sancheti, Founder, Cavalian Consultant and Consultant Accolade Advisors. Ravindra Kashyap, Managing Partner, July Ventures. Swapnesh Maru, Executive Vice President, Toyota Kirloskar Motors. Ramesh Chandra Lahoti, Senior Vice President, FKCCI. Dr. C.A. I.S. Prasad, Immediate Past President, FKCCI. C.A. Shravan Gudatur, Chairman, Central Taxes and Corporate Laws Committee, FKCCI. Past Presidents and Managing Committee members and members of FKCCI. Press and electronic media, distinguished invitees, ladies and gentlemen. A warm welcome to you all for this memorable event to discuss, dissect and deliberate over the Union budget present by Honorable Finance Minister Nirmala Sitharaman. I also extend warm welcome to the guest speakers and panelists for the session. FKCCI welcomes several initiatives expressed by the Finance Minister in the area of millets, health sector, tourism industry, ease of doing business, and the income tax slabs. This is an overall development and infrastructure-oriented budget for the year 23-24. The budget has addressed many of the pressing issues related to assistance to MSME and tourism industry. The budget also has laid emphasis on 7 priorities such as inclusive development, reaching last mile infrastructure and investment, youth power, green growth and financial sector. Today we have a list of eminent speakers who would be analyzing and giving more analysis on these budgetary issues. I'm happy to note that we have a large number of members both physically and virtually. They are participating in today's budget analysis. I wish the program all success. Thank you one and all.
Thank you, President, for your initial remarks. May I now request the Senior Vice President, Ramesh Chandra Lahoti, to kindly do the honors of introducing all the 4 speakers that we have today. Over to you, sir.
Good afternoon to everyone. My President B.V. Gopal Reddy ji, all the guests today for this Union Budget Analysis, immediate past President C.I.S. Prasad, members of the FKCCI, managing committee members, and invitees and guests. So here I am today's analysis budget program of FKCCI Central Tax Budget Committee. Let me first introduce Mr. Pankaj Sancheti. He has over 19 years of professional experience in the field of corporate taxation, transfer pricing and regulatory matters. Served a wide range of Indian and global companies in different industry verticals. He has also worked and led transfer pricing teams in Big Four consultancy at Bangalore, Hyderabad and Chennai. Prior to founding Cavalian Consultants, was partner at PwC in Chennai and associate partner at EY in Hyderabad, where he served for 13 years. That is Mr. Pankaj Sancheti for you. And the next guest is Mr. Deepak Kumar Jain B. Mr. Deepak has over 21 years of experience on indirect taxes, including 9 years in Big Four companies, accounting firms. Deepak is the founder of Accolade Advisors Private Limited and appindiagst.com and provides professional advisory, compliance and litigation support service to Indian as well as multinational companies on excise, customs, service tax, VAT, entity tax and matters. Now I introduce you to Mr. Deepak Kumar Jain B. Now third, our analysis guest is Mr. Ravindra Krishnappa. He is a venture capital professional, an entrepreneur and an avid teacher with 35 years of experience and over 20 startups in his portfolio. He is currently the managing partner at July Ventures. He is a mechanical engineer who moved into IT sector and is thought leader in the area of digital applications for industry. Over the last 30 plus years, has worked in several countries, including the US, UK, and Switzerland. That is Mr. Ravindra Krishnappa ji. And one more speaker, Mr. Swapnesh Maru. He is the director with Toyota Kirloskar Limited, Bangalore. He is a CMA and CFA. His key responsibility areas cover accounting, finance, legal, information technology, human resources and administration, corporate planning. He is also the Chief Compliance Officer with a rich experience of more than 21 years in the industry. He has overseen diverse functions like sales, corporate, governance and risk besides core commercial areas. That is Mr. Swapnesh Maru for you. Thank you.
Thank you, Senior Vice President Ramesh Chandra Lahoti, sir. Friends, let us now take the opportunity of felicitating the speakers who have taken their precious time to be physically available here for us for this today's session for the benefit of all of us. I request the President and the office bearers to kindly join hands as we give a memento as a token of appreciation to all the speakers. Can we have the first memento to be presented to Swapnesh Maru, the Executive Vice President of Toyota Kirloskar Motor, please? request a memento to be given to Ravindra Krishnappa, the managing partner of July Ventures. Followed by CA Pankaj Sancheti, founder of Kevalin Consultants, as well as a consultant with Accolade Advisors. And finally, we have the backbone, I must say, for our chamber, Mr. Deepak Kumar Jain, who has always been so very supportive of all the programs that we do, and he himself is a speaker today as well. Thank you, President and the office bearers. May I now request the immediate past President, CA Dr. I.S. Prasad, to kindly share a few of his thoughts on the budget that was presented yesterday.
Good evening. My dear President Sri B.V. Gopal Reddy, Senior Vice President Ramesh Chandra Lohoti, the young and dynamic Chairman of Central Tax, Shravan Gadutur, all the panelists and Deepak Kumar Jain, past presidents, students. I would not like to take much time. I would like to make a statement that what Prime Minister of India is doing the Azad Ke Amrit Mahotsav 75th year of independence, that we crossed 75 years of independence. The next 25 years is very important, that each of the senior has to handhold the young generation, recollecting the message of Swami Vivekananda and Arvind Maharshi. The youth is very important for the nation. I'm very happy this audience, more than actually the members, have the presence of the next generation, befitting the statement of the Finance Minister that this is the first budget of Amrit Kal. This is the first budget focusing the next 25 years development, what the country needs. I would not like to make much of the relevant classes of both direct and indirect tax. The Finance Minister is always we talk about as a professional, is the innovation of the Finance Minister, inconvenience for the industry. Nevertheless, the professional has to continue of learning. That's what we've been doing last 30 years. Learning is never ending. Each professional has to undergo, understand, make, contribute. The entire budget talks about the digital framework, the new India, the technology and automation and AI. I think the right apt that all the students been here going to be become entrepreneurs next. Hopefully, this budget is going to bring the greatest asset for the nation of creating the digital infrastructure where the rural population can also access to the learning, access to the business. I think the world is going to get benefit by way of India's initiative. I'm sure that the panelists will take both direct and indirect taxes, and our President has been already mentioned that FKCCF wrote a platform for you to perform, thereby can contribute for the nation. With these brief words, this budget is very important for the nation. This budget is very important for the entire young generation. This budget is creating the empowerment of youth. And again, 10 lakh crores is the infrastructure which has been creating. G20 presidents of Prime Minister of India we talk about. One is growth of business. The other is monitoring environment. They have been provided more of funds for the green energy and again the agriculture and education. So hopefully I think this next generation is very lucky enough to born in this generation. Aim I, learn more, and FKCCA can continue to support and make your dream into reality. With this, I think I wish the panelists' deliberation will be immensely benefit all the members and students. Thanks to again the young chairman. Probably I think the finance minister yesterday been spelling out instead of polluting the vehicles. They say that the politicians who have been old has to be removed from the barrier. I think this budget has given a clarity. The India can move only with the next generation who has been IT savvy, who can perform and contribute. There's no question of escapement. Everyone has to earn and contribute for the tax and nation development. Thank you.
Thank you, CAIS Prasad. Friends, we will start off with the technical sessions. First in line scheduled for today is CA Pankaj Sancheti, who is going to give us all a brief understanding of what were the various direct tax related proposals that were contained in the budget yesterday. Over to you, Pankaj.
Thank you, Shravan. A very good afternoon to all of you. I see a lot of youth here today, so happy to see you all with this. And Shravan also told me that there are more than 100, almost 100 participants who have joined online. So good afternoon to all those one who have joined online also. And first of all, thank you to FKCCI to give me this opportunity to present my views on the budget. So without taking much time, ideally I would want much more time, but since we have time restrictions, I'll try to stick to the time which has been given to me. Because there's so much in this budget. I mean, there is a lot of things which the finance minister has said in the budget, but there's so many other things which are not really said, but they are there in the fine print. Just to give some numbers, there have been 122 amendments just in the direct tax. So just in the Income Tax Act, there have been 122 amendments. So, but if you really look at it at a high level, that's what my view. It's not a bad budget, it's not a good budget, it's a decent budget, and that's what we need. But the expectations were quite high because there was so much expectation, actually I would say created by the government itself, because they were saying this is the Amrit Kal, the next 25 years is of India, and India would become a developed country in the next 25 years because we have all the things in our favor going on in our favor. So there was some expectations that there could be some bold reforms, something different. But yeah, I think the changes are coming slowly. They're not coming as fast as we want. So directly, quickly jumping into the subject, on the direct tax front, I mean, there were some statistics which were, so one thing what everyone wants, that's the expectation of everyone, was that there should be reduction in the compliances. There are too many compliances. There's too much effort that goes, the time that goes into the compliance. So before starting the budget itself, the Honorable Finance Minister given some statistics that there is this 45% of the returns that have been processed within 24 hours. So this is all because of the use of technology. It is not that people are manually doing it. It's all because of the use of the technology. And more than 6.5 crore returns have been processed, which is kind of a record. But all this has become possible only because of the technology. And I feel that if the compliances are reduced, certain things, changes are made, then much more is possible. So the finance minister actually kept the personal income taxes to the last, if you have seen the budget speech. But we will start with the personal income tax because that is what is of interest to for most of us. But there's nothing significant given in the personal income tax. I mean, though it was said that there's no tax rebate up to 7 lakh rupees of income, the tax slabs have been changed. But if you really look at it, this is under the new scheme, the new tax scheme which has come. Under that only. Under the old scheme, there has been no change. So if you really look at it, most of the taxpayers, we have given a couple of scenarios in the next slide also, the old tax regime would be beneficial. Because if you are going to make your investment, which gives you tax exemption deductions, ATC, if you're going to make medical insurance, ATD, ATCCD, NPS, and then house rent allowance, and then you have also interest on housing loans. So if these deductions are taken, then the old scheme itself is more beneficial. And these are all very normal deductions which everyone should make and take the benefit of. So very few people, I think, would really get benefited out of this. Nonetheless, the new scheme is kind of made the default scheme. So unless you opt for the old scheme, the new scheme is the default scheme. So I think slowly the government will move towards the new scheme and the old scheme may be phased out. Leave cash and leave encashment exemption, that limit was 3 lakh rupees. So now it has been increased to 25 lakh rupees. So that's one change. Peak rate of surcharge has been reduced to 25% from 37%. This peak rate was applicable to people having income more than 5 crores, but still 37% was too high, and the effective tax rate for that slab of people was going to 43% almost, and now it's 39%. I feel 25% is also high, but nonetheless from 37 to 25, it's been some relief for the higher slab income people. And again, it looks high because when you look at companies, at what rates taxes are companies paying? I mean, it's 25%. And when you look at individuals, they have to pay 37, 40% kind of a tax rate. So it looks high. Ideally, irrespective of the nature of the person, or it's an individual, company, LLP, the tax rate should work out to be same. So this is high, but a good relief in from making it 37 to 25. And again, some more changes were made to plug the loopholes which were there in the Act. So when I said 122 amendments, most of these amendments were either to make loopholes which were there in the Act, potential litigation which the government felt would come, or has already come and Supreme Court has decided on certain aspects. So those loopholes again have been closed. Rationalization, lot of amendments were made in the last 3-4 years. Those amendments could not be implemented or could not be enabled certain fact pattern because the Act did not provide for those scenarios. So those amendments are there. So that way the amendments are there. What we have covered is only the key amendments. And one amendment is interest on double deduction interest. So if you are taken a house and you're claiming deduction, you get a deduction of the interest what you're paying. Now same thing, when you sell the house, again you get a deduction of the cost of acquisition. And cost of acquisition also includes the interest which you are paying. So now that thing has been reduced. They are saying you cannot claim double deduction. If you have already claimed once the deduction from your income as a housing loan interest or some other manner, you cannot again claim it when you sell the house or again when you do some other restructuring. Similarly, deduction under section 54 and 54F, which is for reinvestment deduction, that has been capped to 10 crores. So what was happening is people who were getting a lot of capital gain, they were investing in a house and claiming deduction of this amount. So now that has been capped to 10 crores. I think it should not make a big difference to many because 10 crores, anyone can buy a house. If someone was buying a really very fancy house that literally was not a house and maybe with all other facilities. So 10 crore is a good amount of deduction for a housing reinvestment. Similarly, tax-free income, which some taxpayers were investing in LIC policies, life insurance policies, and getting tax-free return. There was a cap put on earlier in 2019 that LIC policies which are ULIP based, linked market return based, on that you can invest only up to 5 lakhs a year, 2.5 lakhs a year. Now for other policies, they have kept a limit of 5 lakhs. So whatever investment made in the past is fine, but whatever new investment is made in these policies, if it is more than 5 lakhs, then the return income what you're going to get is going to get taxed. Tax slabs changes again in the new scheme, we can see in the slide. I will not go into much detail because already much has been said in the newspaper. This has been in the news. It's been highlighted by the government a lot. But as I said, it's only benefiting the new scheme. Okay, so this is one slide where we have done some calculation and seen, as you see, I mean, based on our calculations, even if you're going to keep 2.5 lakhs, 3 lakhs of deductions, the old scheme is much, much better than the new scheme for most of us. Corporate income tax rate for partnership firms, LLPs, no changes. So these are the effective tax rate. Number of tax rates are there for based on what company's turnover is there and other things. Ideally, there should be 1 or 2 tax rates, but we have too many tax rates now for companies. Manufacturing companies have a separate tax rate, and then companies with less than 400 crore turnovers have a different rate, higher than 400 crores have a different rate, foreign companies have a different rate, but no changes this year. Withholding tax. So ideally, if you look at it, if you see all the pre-budget memorandums that have gone, there were two things which everyone was requesting. I mean, the industry associations were requesting that capital gains should be reformed, capital gain taxation, and then withholding tax and TDS should be reformed, because there's too much complexities in this, too many different kinds of assets. Depending on the person who is selling it, he may have a different tax rates. So too many tax rates, the computation methodology also was little complex. But nothing has come, really too much has come on the capital gains tax. TDS, some changes have been made, but not to the expectations. Very few changes have been made which are beneficial to the taxpayers. Most of the changes have made from the perspective of the tax department or the tax collector. But on the top of the change which could impact some of us significantly is the TCS on overseas packages, or any remittance which is made under the LRS scheme, other than education and medical. The TCS has been increased to 20% from 5%. So if you're really planning to go for a foreign holiday, really there's a 20% jump in your budget. I mean, you can obviously claim that credit when you file your returns, but at least to almost a year or more than a year, your amount is going to get stuck. So this is not sure why this change was been there. I'm pretty sure no one would have recommended it also, but I think they have maybe they have got a good tax in this under this, and so have they increased from 5% to 20%. Online gaming, certain clarifications. Because there was a limit about 10,000 which is there, then only TDS should be done. Now for online gaming it has been reduced. There's no limit. Any gain you get from online gaming, TDS will be done on it. And for other games also where there was a 10,000 limit, there also they said you have to, doesn't have to look at each transaction, but aggregate for the year, whatever is there, you'll have to look at it, and accordingly if it is exceeding 10,000, you have to do TDS at 30%. Certain penal provisions extended to new TDS provisions. So there's new TDS which has come last year was 194R and 194S, which is for non-cash benefits perquisite. So there were TDS provisions introduced for that. So the penal provisions were not changed because the penal provisions still said tax not deducted, and specifically this aspect, penal provisions for not deducting TDS on non-cash benefits was not provided. So that has been extended to them also. And there was this 196A section where you had payments made to non-residents. The TDS rate was provided was 20%. Generally, when you make payment to a non-resident, you see whether under the Act the rate is better or under the treaty the rate is better, where India has signed with the respective country, and whichever is beneficial, you apply it, subject to obviously the non-resident providing a TRC, a tax residency certificate. So this section had a flat rate of 20% without referring to the TRC or the treaty. So that has been now extended so that it's now consistent across other provisions for non-residents. TDS credit for income reported in the past. So generally what happens is you get a TDS credit the year you offer the income, right? So if you have reported the income in the past and the TDS is deducted in the subsequent years, there was no mechanism you could claim a credit of that TDS in the subsequent year, because in the subsequent year, the income related to the TDS is not offered to tax. So now there is an enabling provision. Now this, why would someone deduct TDS in the next year? Because it's not in our control, because the other party has to deduct the TDS, and for whatever reason the other party would have not deducted the TDS in the earlier year where I have offered the income to tax, and he would have deducted in the other year. So now there is an enabling provision. The taxpayer can make an application and get the TDS for the past years. There is this 206AB section which has a higher rate of TDS for non-filers. So this higher rate of TDS is applicable to all non-filers, whoever have PAN. But now it has been changed that this higher rate of TDS will not apply for non-filers who are not required to file the return. There may be a lot of non-filers who are not required to file the return for the fact that they may not have taxable income. So for them it is not covered now. It is only for those non-filers who are required to file a return and not filing it. TDS on cash withdrawals. There is also a TDS on the cash withdrawals. The limit has been raised a couple of times in the past. It is 1 crore now. So if you withdraw more than 1 crore of amount. Now for cooperative societies, that has been increased to 3 crores. Similarly, again, there is this provision under the Act where you can go to the tax authorities and say that I will not have taxable income, so reduce my TDS rates on my income that is getting deducted. So there was one section 196 LBA, which is income from a business unit as the REITs kind of thing. So for that, you couldn't have gone it. So now there is a window open for those kind of income also if you're getting and you not really going to liable to be taxed at the end of the year, then you can make an application and get a lower withholding deduction. Again, for EPF non-PAN case, EPF withdrawals again of non-PAN cases, there was a special rate 30%. Now that has been removed, so it is now reduced to 20%. So some rationalization, otherwise there were too many rates. Moving ahead, startups. So this is something which so there are certain things in the budget which the finance minister, all the finance minister always likes to touch upon in the budget. I think it gives us feel-good factor to the, to the people also that there's something being given for. So you will find every year there has been some changes which is there, or something given to startups, something on the gift city, which is our Honorable Prime Minister's dream project kind of thing. Something on charitable institutions. So every budget, at least last 10 years budget, which if you look, there is some changes under these provisions always made. So this year also some changes, very small changes. So the startups can get a tax holiday. You're right, they can get a 3 years tax holiday by making an application. That for the window for that was closing on 31st March 2023. They have extended for 1 year. I think last year also they extended for 1 year. So every year they extended for 1 year and like something is given, but yeah. So that's there. And also the carry forward loss, the startups, there's a condition when you incur a loss, a company incurs a loss, the shareholders should be the same. At least 51% of the shareholders should be the same. Now for startups, this exemption was given that that condition need not be satisfied because startups, they raise funds and the 51% shareholding may not be there same. So as long as the old shareholders continue to be the shareholders when the loss is set off, it was fine to be carry forward. So the losses was for the first 7 years only. Now why first 7 years? It's very strange because the startup definition is itself for 10 years. So now they are make it consistent that the startup losses incurred during the startup period can be carried forward without any conditions. MSME and cooperatives. Cooperatives this time it has been a little focus area of in the budget. So some changes in the which will impact the MSMEs and the cooperatives. One good thing is that 43B, which is payment on deduction only, it's allowed for a lot of payments. It's there. That has been extended to MSMEs also. So now companies who are going to pay the payment to MSME have to ensure that they make the payment on time. Otherwise, deduction will not be allowed, and it will allowed only on payment basis. 44AD, which is presumptive taxation for individuals, HUFs, partnership firms, where you can not maintain the books of account and offer a fixed percentage of income to taxation, that the limit has been extended from 2 crores, it is now 3 crores. Similarly, for professionals, which is under section 44ADA, the limit has been increased from 50 lakhs to 75 lakhs. The lower 15% tax rate was applicable to new companies, new manufacturing companies. That has been extended to now cooperative societies also, provided they commence manufacture before 31st March 2024. For sugar cooperatives also, there is some enabling window because the sugar cooperatives buy sugarcane from farmers and the rates are later on changed by the government authorities and other things. So they have to make payments for the prior year. So this litigation was coming up that you are making payments for the prior years, and so this will not be allowed in the current year. And you couldn't revise the prior year's returns because the window of filing the revised return is closed. So now there is an enabling window. The sugar cooperatives can go back and claim the excess amount which they are required to pay for the prior years. Again, limit of cash loans and deposit. There is a limit on cash loans and deposit any person can take. It's 20,000 only. So that has been increased for primary agriculture credit societies to 2 lakhs. So this is the last slides. Not much. So there are a lot of other proposals. Some of the briefly have touched upon some of these here and this thing. But as I said, most of the other changes are to plug loopholes, cover specific scenarios, or its rationalization of the provisions to make it consistent across taxpayers. Charitable trust and institutions, so they had again a lot of changes in this thing, but it's more toward procedural changes, timelines for filing the return and other things. How do you use the surplus? How do you use the corpus? So those kind of changes in the charitable institution. Gift city, the tax holiday benefit, if you're moving to a gift city, the capital gains exemption. So the government is promoting gift city like a competition to Dubai or Singapore, which is like a financial hubs. So there if you operate, so if you want to move there and you get funds want to move there and they get certain capital gains exemption, that has been extended to 21st March 2025. Dispute resolution, Joint Commissioner of Income Tax, a new authority or post has been created. 100 such posts will be created because there's huge backlog of cases which is there at the Commissioner of Income Tax Appeals. So this is the first stage of appeal in the Income Tax Department. So to clear that backlog, a new post of Joint Commissioner of Income Tax of Appeals is created and smaller cases will be dealt by them. Inventory valuation. Now, assessing officers obviously cannot be experts in everything, right? And inventory is one place where, the department feels that taxpayers do a lot of manipulation and just with this inventory, and they can't do much because they don't have the expertise to value inventory. So this is where the amendment has been made. The assessing officers can now refer cases for valuation of inventory as per the provisions of the ICDAS, which is the accounting standards, or the Act, to the cost accountants. So there is some good thing for the cost accountants. If you are there, this could be a good business opportunity. Refund due to an SSE, there was some varied provisions in two different sections. Now they have consolidated. I think much more focus will be there. If there is any refund due to a taxpayer and there is tax due also, tax demand also outstanding for some other year, then it will not be given until the refund is, the refund will not be set off against the tax demands that are there of the taxpayer. So this could be again a little dangerous because this something similar was there, but it was not applied in so seriousness. Now with this new focus, I think the tax authorities will not give you refund unless you have all your tax demands closed. Capital gains on intangibles. So this is what I call the BC Srinivasa Shetty case. I've been hearing this from the time I've done my CA. This case, so we are still dealing with this. That case basically said that if you don't have machinery provisions, you cannot tax it. So you should have a charging section also, you should have machinery provisions also. So cover the loophole of certain calculation of capital gains for intangibles where no cost has been incurred. That is introduced now where no cost has been incurred. They are saying it will be taken as nil and computed. Income from market-linked debentures. Again, I said capital gains taxable at different rates. So there was this market-linked debentures which were being offered to tax at debt instruments. But the government is saying, no, those are not purely debt instruments. So they will be taxed at short-term capital gains at the normal tax rates. Capital gains transfer exemption for gold. Gold. This is for physical gold to electronic gold receipt. It's actually no-brainer. It should be when you convert your physical gold to electronic gold, there should not be any tax. Like if you are having a physical shares and you convert into demat, there should not be a tax. But yeah, good thing they are clarifying it. Some changes on the transfer pricing provisions. The time limit for furnishing of documents when a transfer pricing case is picked up, it's 30 days. Now the 30 days has been reduced to 10 days. So there is now the companies will have to keep the transfer pricing documentation ready, and because if within 10 days if it's not given, then there could be penal consequences. Similarly, there is a section where there is a limitation on the interest deduction on the transfer pricing provision itself, which is 94B, that there is an exemption given to banks and insurance. Now that exemption has been extended to NBFCs also, but they have to be notified what kind of NBFCs. The final is the penalty provisions for furnishing inaccurate specified financial transactions and reportable accounts. So generally, banks and other intermediaries are required to report a lot of things to the income tax department, right? So sometimes they report wrong things, but they take a position that the taxpayer has given me wrong information, accordingly the wrong thing has gone. Now the amendment has been made that they could be liable to penalty and they can claim this penalty from the taxpayer. That's what the section says, that this. So but the intermediary at first stage for giving any wrong information would be liable to penalty. So now it will be, I mean, it will be a onus on the intermediaries to double check or maybe have the KYC norms more stronger so that the correct information is collected and submitted to the tax authorities. Yeah, so with this, I am not sure if I've extended my time, but this is what I could do. So thank you, and yeah, if there are any questions, we can take it up later. Thank you.
Thank you, Pankaj, for demystifying quite a few income tax provisions. Next, we have with us Deepak Kumar Jain, who is going to touch upon the indirect tax proposals, primarily GST. Over to you, Deepak, sir.
Good evening to all, those present in person, those present in, I think, virtually. Very encouraging to see that 200 or more is what we have in terms of people listening to us. Very happy. First, let me kind of thank FKCCI to have given us this wonderful opportunity to partner and share our views and thoughts on something which is, I mean, soon after the budget, each of us kind of look at what is the fine print. So this is something, I mean, we keep it one day later just to ensure that what is there in the fine print is analyzed and informed analysis is kind of given to the audience here. So we'll do our bit. I thank my friend Pankaj to have kind of, while I think in terms of the time he met his timeline, but I'm sure he had more to talk. I'm sure that's the reason I think in terms of panel discussion, we have kept 45 minutes. So I'm sure whatever questions the audience here and plus those who are attending virtually can kind of share it, and we'll have good time to kind of address them. One request to Shravan is, and to my team here, is those questions which are kind of coming in from people attending virtually can be kind of given to Shravan so that moderation for panel becomes easier. Good. Now, in fact, there's this ad for 5-star, right? कभी कुछ नहीं करने से भी अच्छा हो जाता है. So for indirect tax, it's like that. So while from a tax perspective, direct tax, indirect tax, earlier indirect tax had more number of, in fact, it was always a competition between direct and indirect as to how many amendments would come in indirect tax, which will kind of beat the direct tax, and who will have more talking time. So now it is very simple. The indirect tax is probably the kuch nahi karne se acha hota hai types, right? So anyways, the collections are kind of going the buoyant way without, I mean, it is an auto pilot mode. And whatever now kind of comes in budget is customary. It's like whatever GST Council in its meeting kind of decides. That's what kind of comes in from I would say it's more in the nature of getting the GST Council's proposals into action. That's where it is. Now, before I kind of move on to the not many changes in indirect tax, but I will kind of do justice in terms of kind of giving clarity to whatever amendments have kind of come in. First is in terms of these numbers. I mean, if you see the way in which the last, say, 5 to 6 years, how the tax revenues have kind of gone in, right? So there was a dip during COVID, and the recovery which India has kind of shown despite COVID is really very encouraging. IMF, as Shravan in his opening remarks also mentioned, certainly India is standing tall, and many countries are kind of looking up. In fact, the way India is kind of performing, I mean, it looks like we are not a dependent economy, well, though we are actually certainly one. That cannot be kind of disputed. But what is also alarming is the inflationary trend, right? Very high inflation, which can kind of give, what do you say, some kind of a sense of fear. Are we at the brink of a recession? Because this is something which was, in 2008, we had a recession, right? This is something which, if you look at 2008 scenario, this is something similar then. So, and from a revenue collections perspective, right, we are now crossing 33,000 crores, both direct and indirect, with direct tax being contributing about 55% and indirect tax contributing the balance 45%. Now, the year to come, I think this finance minister in the 5 budget presentations of hers, I personally have kind of seen how each budget she has kind of improved herself, right? Certainly, she comes from a modest background, and with all her, what do you say, well-informed things, I mean, the budget always plays a balancing role, and certainly this budget, I mean, in terms of everyone who have kind of commented, really has kind of been balanced, looked at long-term rather than short term. So certainly there is a lot more in terms of rather than short-term games. The intention is to kind of look at long-term investment in infrastructure and therefore help in terms of creating skills in terms of be it education or creating jobs in terms of things. So that's been the focus, and that's where we have been kind of seeing a steady kind of growth. So now let me kind of touch upon some of the, amendments which have happened from indirect tax. I'm sure there have been significant rate changes. I would not kind of spend the time of the audience here to kind of look at individual rate changes, but in terms of specific points, how it can kind of, what amendment has happened and how it kind of impacts us. Now, one of the very good amendment which has kind of happened is for the MSME. Now, if you see from a GST perspective, if you were to kind of sell goods on e-commerce, if you are a dealer who's a composite dealer, there was a restriction in the current GST law not enabling you to kind of sell on e-commerce. FKCCI has been one of those who have kind of, apart from other trade associations, who have been very strong in terms of getting this recommendation passed, allowing composite dealers to also be able to kind of sell through e-commerce. And thanks to this, I think we see this amendment. So now composite dealers who have turnover less than 1.5 crores in terms of goods and 50 lakhs in terms of services. Services is not touched upon here, but largely those will now be able to kind of sell through e-commerce. Similarly, there was in fact, an amendment which happened in 2018, where sales which largely are non-GST sales, that is, which originates outside India, goods originate outside India and is delivered also outside India. So while from an entity perspective, it is billed through the Indian entity, there was an exemption which kind of came in which said that these are non-GST supplies. It need not kind of be taxed, and in fact, that these, if it is a non-GST supply, it need not also be kind of treated as exempt turnover. And there could be whatever credits which we have, if it is an exempt turnover, ordinarily there will be a reversal of those credits which are directly related to that exempt turnover, or if there are common credits to the extent to which this value has to the total turnover, reversal needs to kind of happen. So they have kind of made those necessary amendments in the past, which basically kind of said that for transactions connected with, which originate outside India or bond-to-bond or high-C sales, need not kind of, not bond-to-bond, but largely those which originate and destined outside India need not need not have any reversal of credits pertaining to that. But what this budget has kind of done, unfortunately, is for sales which happen in customs bonded warehouse, that is goods which are imported, kept into bonded warehouse, and sold from a bonded warehouse either as for home consumption or for re-export outside India. Now that is treated as exempt supply, and any common credits which you have or any direct credits which are related to such supplies will now be required to kind of be reversed. So this is something which may be against the industry, but is something which has kind of come in. Similarly, there were a lot of, as Pankaj said, there were a lot of amendments which happened which are more in the nature of reformatory. There have been some kind of, litigations around, or there have been some kind of ambiguities around. So budget probably has become a methodology, or I would say a platform for kind of clarifying or settling those disputes, and this is one of them. So the question was with respect to credits which are taken or which could have been taken for CSR spend. Now, CSR spend is something which is, in many cases, required statutorily. This is enforced upon by the law. So one view certainly was that because it is enforced upon by law, the purchases related to CSR should be eligible for credit. There have been conflicting decisions. One is one view saying that yes, it is part of business and something statutorily required. You can take credit. Other view has been that CSR is a non-GST. It is something which is not taxable supply, and therefore credit cannot kind of come in. In this budget, they have kind of said that credits relating to CSR cannot be taken. Right? Rightly or wrongly, I think it's not that right view or wrong view. At least from an industry perspective, we see a clear clarity. Right? So you become, if you're doing something, as a CSR, any purchases connected with that, you can't kind of take credit. So hitherto, what was kind of getting in for some companies as a balance sheet item as regards GST is concerned, now will add to P&L. And in fact, that amount also of GST paid on purchases will add to the value of, or the quantum of CSR spend which one has kind of done. Next is in terms of, I think, again, it's I would say a beneficial amendment. There is a requirement in GST law to say that those people who supply or who actually have wholly exempt supplies but also have liabilities on reverse charge. So if you have payments to non-residents, there's a liability which you have to kind of get registration done only for those payments to non-resident and comply with respect to registration, comply with respect to compliances. This has been kind of, for those assessees who have only reverse charge payments, certainly was not, this was adding to cost of compliance, and thanks to the, the representation, they have kind of come with an amendment to say that suppliers who supply, those who are wholly exempt, who are not, rendering any taxable supplies, but only have, say, reverse charge liabilities, need not register. So I would say this is again a welcome kind of amendment. The rest in terms of compliance has been with respect to filings of GST returns. Now, hitherto, as today before the amendment, if I have not filed my returns, let's say for any period, I could, even if it is 3-year-old or 5-year-old, I could still go ahead and file. The system allows me to do that. The recovery provisions in the GST law have 3-year period for ordinary and 5 years for the extended period. So to probably get in line with that, they have kind of come on with a provision to say that yes, for filing GST returns for non-filers, you have a maximum time period of 3 years. So if today, it is at a stage where any registered assessee has not filed his returns, he can go back maximum 3 years to file and ensure compliance. And there again, from government's perspective, why they have kind of done that is best known to them. But largely, the intention is to kind of, if not that there is no liability, from a liability perspective for the period, even prior to 3 years, you'll have to kind of pay in. But it will kind of also come in with penal provisions. If before show cause notice, if you were to kind of file your returns and pay your taxes with interest, penal provisions are not there. So at most, it is basically kind of saying that at most you'll have 3 years time of not being in the radar of the government, and if you would want to kind of ensure compliance, ensure that it is done within 3 years. That's where it is. The other maybe one which impacts, I would say, certain companies, not all companies, is the amendment with respect to online information database access and retrieval services. There have been 2 amendments, one in the context of the liability on the supplier, and second is in the context of the nature of activity per se. Now, the liability to pay taxes under online information database access retrieval, the way in which the definition was defined, casted upon the liability only if the assessee was registered, he was liable to kind of pay tax. If the assessee was not registered, the liability would arise only if the transaction was other than for business or commerce. So that created a kind of I would say it was an amendment to kind of plug the loophole there. It created an opportunity for those individuals or those assessees who were not registered but using those activities for commercial purposes, not to kind of use that particular definition and to kind of avoid the liability. So there is where I think they have kind of, here again, I would say it is more to do with settling in something which was litigated. So it settled in to say that even if the recipient is having an activity, whether it is for commercial or non-commercial purposes, will still have to kind of pay tax. And one more, I would say, welcome amendment is with respect to credits for transactions connected with transportation of goods in the context of exports. Now, there was an amendment which happened in the GST law which said that if let's say, I engage a logistics service provider for export of goods. Now, the place of supply for the service provider was based on destination of goods, which means to say that while he's kind of billing to us, billing to me in India, the place of supply which he would be declaring is outside India. So even if I'm paying GST, I could not have kind of taken credit. So this was kind of creating for export a demerit in terms of nature where taxes were being paid, but I could not kind of take credit. So there have been representations on this context, and I think in the GST Council meeting, this was kind of corrected, and which is what is kind of enforced in this budget through amendment of the IGST law, where the place of supply has been clearly said that it will be, in case of registered assessee, the place where he is kind of registered and not where the goods are kind of to be delivered. So this will allow taking credit for all logistics service providers for transactions connected with export. On customs, there have been significant rate changes. In fact, India adopts the harmonized system of nomenclature where classification is kind of taken from the HS. And there have been time and again changes in HS, and the last change was in Jan 2022. So there have been sweeping changes as regards, so the Indian customs does not align with the HS in many cases, in many line items. To kind of align them, there have been many tariff entry changes where the line items in Indian customs is now aligned with the HS classification. So it basically allows, I mean, from a classification perspective, if it is aligned with HS, it allows parity with respect to other countries who also have adopted HS classification. So import and export becomes easier if there is, a common classification. So there have been sweeping changes as regards those line items. And wherever there's an exemption notification, ordinarily it has a validity period of 2 years. Now there has been an amendment to say that the said period of 2 years may not be restrictive for certain transactions which are listed. Right? So if you have a bilateral agreement or if you have privilege agreements, in those cases, the period of 2 years restriction will not apply, and either the timeline specified in the notification or till such time that the notification is rescinded is what will kind of apply. And the one more, I would say, very unfortunate kind of amendment which has come is with respect to settlement commission. Now, settlement commission cases arise when there is a dispute with the department and the intention is to kind of settle it. Now, the period for settlement is not in your control. After you have filed an application, there could be a possibility that, yes, it may take 6 months, 9 months, or 2 years to kind of settle in. Now, what this amendment has kind of done now is that if the settlement does not happen within 9 months, it is as if you are not made. And it allows the assessing officer to kind of initiate recovery proceedings. So this is archaic in terms of amendment. Why they have done is good to know from government's perspective, but certainly not a welcome amendment. That way. Yeah, we can change the next one. So these are certain changes which have happened as regards customs. The intention is not to kind of run through. So largely, you would see that from an amendment perspective, it has been more in the nature of cosmetic, where whatever recommendations which GST Council has kind of done has been kind of implemented through this budget. So that's where it is. Maybe whatever questions which kind of come in from direct tax or indirect tax, we'll be happy to kind of take it in the panel discussion at the end. Thank you so much.
Thank you, Deepak Kumar Jain. Now that we have looked at the inputs given by two speakers, one on income tax and the other speaker on GST, may I now request the speakers to take a couple of questions from the audience at this juncture. Any of our members having questions? Yeah.
As per my knowledge, every section A to Z, Z1, Z3, for example, 80, HSC, HC, there is so many sections which is, I don't know whether you digest that rules or not, I don't know. As an SSC, I want to understand through you. You said there is a 122 amendments. Can you say a few things? What is amendment number 1? Next day we are sitting, after the budget announcement, we are sitting in front of you. Even after the budget announcement, any changes are there? Are followed like GST every day, morning one circular and evening one circular. Like that, this also follows. Because my Dr. Prasad will agree with me, when Chidambaram was there, I put this question. The amendments was not simplified. Till it's simplified or complicated? You want to answer my question. About deduction, now if I say earlier regime is better than the current regime, the tax system, where I can allow, I'm eligible for the BPF or any other things in investment. Now, even we all speak about scientific way, first of all, we must feel bad or good, I don't know. She is not an economist. She is a politician. How far she has done good to us, I don't know. Sir should say, you must say. You be frank with us because there is no, your enemies around us. You be frank with us to educate us. Why we are sitting in front of you, we think that you are going to educate us, solve our problem, certain extent. So my question is, you said so many 54 ABR, so many things and exemption things. Under current, what she announced the budget, how the assessees are free Are there any good scope? Any exemption is getting, you said 5 to 7 lakhs. If I see the differences, I don't see anything. You only through our finance minister, the ghee will be touched or gone through the lips. The ghee means tuppa. That's what I understood. Please correct me if I'm not. Then what is the period of assessment or scrutiny if you file the income tax? For example, 2021-22, you file the income tax return. What is the time period to the income tax department to assess or scrutiny? This is what my question. And about GST, I think we can ask, because GST, as I rightly understood, every morning I get one circular, evening one circular. Unfortunately or fortunately, I don't know how much we understand and you understand. Later you can educate us.
Good. Am I audible here? Am I audible, Shravan?
Yes.
Wonderful, yeah. So I'm sure the fact that Shravan has kind of initiated this question and answer before all the speakers speak itself shows there was a clear, what do you say, expectations gap, right? Each of us, we felt that yes, this budget required, probably this was one of the last budgets in this kind of term from an NDA perspective. And in fact, we were, before the presentation, we were kind of casually speaking in terms of our, as speakers here. Certainly each of us had, in fact, Swapnish Maru also vocally kind of said that there is no policy or significant kind of changes kind of coming in. Largely, sir, we are in agreement with you. See, here the intention for us here is to kind of what they have done, the intention is to kind of spread that knowledge, right? So the intention from our perspective is there is a gap in terms of what we want versus what is implemented. I'm sure FKCCI is a wonderful platform there, and some of the recommendations which FKCCI has sought for has kind of come in this budget, and I'm sure Mr. I.S. Prasad has kind of met Nirmala Sitharaman personally, and that probably has helped in terms of getting those amendments. So certainly that is there. So maybe I'll probably request Pankaj to just give one of his perspective, and then maybe what I would request, sir, if we could kind of have the other speakers finish their conversation, we have a good time for the panel discussion. It will allow us to kind of get all questions at one time, and it will help in terms of the flow also. So maybe I'll request Pankaj to kind of add on.
Right. Yes, so your understanding, my understanding would, I think, would be at the same table. But by nature, I feel if I have to give my views, by nature, we Indians are like critics. Like we like to say that, yeah, this could have been done, that could have been done, much more could have been done. So always the ask is definitely there. And definitely, not all expectations have been met. The amendments, as I said, are more rationalizations, loopholes that are being plugged. So just to give a simple example, there is this provisions on timelines, which you said on what is the timelines. Now the whole assessment system has moved, is going to become faceless. So the faceless schemes have come, and that there was a timeline under the act by which the faceless scheme was to get implemented. Now the timelines itself have changed in this act, in the last year's act also, and this year also some timelines have changed. But the enabling provision to implement the changed timelines in the faceless scheme was not there. So now that has been enabled, power has been given to change those schemes now, change the dates in those schemes now. So this is, I would say, the process, the way the changes are happening are not very forward thinking. They're just looking at, yeah, okay, this is the change to be done, let's do it. And then all this feedback that goes from various industry associations and individuals and others, the critics, I would say, that makes them government realize that what they have done is not correct, and then maybe correct in the next budget. Unfortunately, very few provisions in the Finance Act, in the Income Tax Act are made through ordinances. It was during the COVID time there were sub ordinances passed because the government and the parliament also does not look favorably to changes coming through ordinances. So every year, as Deepak said, this has become the mechanism for the government to correct some of the wrong. We have seen number of times they are drafting errors, which is very odd. Because this goes through such a long process, and it's such a high authority that passes the law. But they are drafting errors also there. So those are also corrected sometimes. So yeah, I would say that the ask is always there for more. But yeah, we cannot get satisfied. Maybe we don't know. Maybe if we were the finance minister, we would have made the same mistakes. So I do not wonder what pressure the finance minister functions and other things. But as, my guess would be as bad as whether it's a good, bad, or whether we need more, yes, definitely more. So I don't know whether that hopefully answers your question, but yeah, it's a thing which needs to be discussed.
Number one. Number two, my question, other question is about scrutiny. What is the time limit?
So the
Any time limit, or they can go back at front back or whatever?
Yeah, so the time limits which are there under the Act have been shortened over the period of time. So previously you had time limit, for a long time it was 1 year from the end of the return assessment year to open the assessment, but that has been shortened now to 9 months. So that's the currently 9 months, and then within 1 year they have to finish the assessment. So that's the current time limit. But if for different assessment years, a different time limit is there. For 21, 22, if you are looking at it, then they have to send the notice if they have to pick up for scrutiny within 9 months, and within 1 year complete the assessment. So at the most 2.5 years is what is there. Assessment has to get completed from the end of the year. So 21, 22 means it's basically by 24 December the assessment would have to got completed.
But
I think what Sari has been asking, income escaping assessment.
Okay. Yeah, I think for that the time limits, reassessment time limits are different. Then 264 they can reopen it and redo a reassessments. So depending on that, then you have the income limits. What is the amount of income, and if it's more than, I think the thresholds of income also have changed over a period of time. So yes, I think there would be different time limits, the higher time limits for those kinds of income.
higher tax or higher tax is more time limit or
Yes,
less time limit?
yes, higher taxes also. So if you take those incomes which gets detected, 69, 68, and then again there has been an amendment in this year also again on those sections, which says that the tax was only on cash components. Now they say on the in-kind components also, if income is deducted, on that also there will be that will also be considered as income and taxed at the same rate. So maybe we'll have to go a little specific, but this is what I can answer right now.
Thank you, Pankaj, and thank you, Deepak. Can I now request Mr. Ravindra Krishnappa to share his views on the budget, primarily on how the budget has impacted the economy? Can I request the AV team to kindly present the deck of Mr. Ravindra Krishnappa?
I'm going to focus, first and foremost, declaration. I'm not a finance person. Right? I have not studied finance. I'm a mechanical engineer, but I'm an investor. And for me, the perspective that I've always looked at the economy or any of the budget is slightly different. My first perspective is, what does it do to the country? Right? So I'm going to paint a larger picture as to why we are seeing what we are seeing and why we think some of these are very important for us to understand, especially those who are sitting there looking at what we do. So from an assessment perspective, just 4 or 5 months ago, I got an assessment of 2009. That was because when they tried to upload the old records, we had some of these things come up. So bear with me, the first 2 slides I'm going to talk about. Yeah, no, it was some old update. They just sent an old demand that they keep sending every 2 years and 3 years. Although it's been paid and closed, I have the receipts. But I think it's when they start computerizing and they start uploading all that, I still get a few demands from the very old piece. Having said that, I think I'm going to focus on the big picture. I'm going to tell you a story and focus on the why of the story, right? Because it is important for us to understand and focus on the big picture. So with that other piece, let me first tell you upfront that I think this is a good budget for the country. If you talk about debates on a budget, we in India are the only one who pay so much attention. And that is because traditionally a budget are made to create an exception, not a rule, not a guidance piece. In some cases, our laws are oriented to providing exceptions, right? The more exceptions you have more compliance issues. This is a very simple process. So from an overall piece, the thing that I wanted you to understand is, has anybody heard of ChatGPT? ChatGPT? Yeah. This is something that's been released where It's like Google, you ask a question, and it'll throw out what you should do. So just as an exercise to get all of us to think slightly differently, I posed this question to ChatGPT this morning. If I am the finance minister of India, how would I present a balanced budget? This is what I presented, right? And this is the answer that I get. The highlight is mine. ChatGPT has not done the highlights of revenues, expenses, etc. Highlights are mine. But just go through this piece. Revenues, increasing government revenues through measures such as tax reforms, expanding tax base, and improving tax collection. Can we argue on that? No, right? Expenses, controlling government expenses by reducing waste and inefficiencies, prioritizing spending on essential services and programs. Deficit reduction, where we talk about reducing budget deficit to ensure government revenues are greater than government expenditures. Fiscal allocation, allocating funds carefully, prioritizing, and it talks about healthcare, education, infrastructure. Okay? Encouraging private investment, we'll come to that in a minute, transparency and accountability. Right? The last sentence is also not mine. It is ChatGPT putting the last sentence. It says, by taking these steps, you can present a balanced budget that supports economic growth, refuses deficit, and improves the lives of the citizens of India. This is a chatbot AI answering this question. Can you find a fault in this? Can anybody fault this? I can't, right? Because this is an expectation of all of us as citizens. So what is the issue? What is the challenge? Why do we spend so much time debating this every time? Right? That is because in some ways there's a lot of focus on specific exceptions that we want to go back and work through. Do we have exceptions in this budget? Yeah. Or do we have some provisions in this budget? Yes. As somebody from Karnataka, I am very happy that we have two provisions on expenditure. The North Karnataka, we have 3,500 crores allocated. And there's one for Bangalore also, which is our metro and mobility. Correct. So we are focused on where it is. But as I said, I want to focus on a big picture for a minute, right? Why do I think that this is an important exercise to focus on the big picture? Because I wanted something that will feed the growth that we are seeing in India. So all of you have to just focus on some of these numbers. India will be one of the fastest growing economies of the world. We have talked about it. Economy will go from 5.7 to 6.9% and 6.9 to 7% in 2023-24, right? Now this is a dip from 8.7 in the previous year. Real GDP numbers are various. What does this mean? We have talked about it. We will be the world's third largest economy if we continue to grow at this pace, surpassing Japan and Germany. India GDP could more than double. We'll come to that. Now, when you make this statement, you have to go back and say, is there a risk and is there optimism? This is why I told you, focus on the big picture. I, for one, am very optimistic. Optimistic not because I don't have the data. The data that I'm basing this on is that the private sector balance sheet has been the best that it has been in the last decade. Okay? Corporate deleveraging has imputed. So if you look at NPAs that is sitting on the bank, so there's a reason why all of the banks, if you see in the last, except for the Adani piece in the last 1 week, if you looked at all the share price of all the banks, private and public sector, there's a reason why the share prices has been going up from an economy perspective. And the reason is that their NPA has dropped dramatically, significantly, right, as compared to the previous years. High GST and direct tax collections, right? We had a 25% increment, and in my mind, that provides us with a cushion, and I'll come to that, right? And India has made key advancements in infrastructure, technology, and energy. I'll come to some of these things, right? But there's a fundamental difference that is fueling this growth as compared to other countries. please understand that this growth is fueled mainly by internal India consumption. Huge difference when you look at the economy, right? That means your internal consumption is a stable consumption for you to grow on. If you just compare it with something like what's happening in Sri Lanka, the reason is that a lot of their consumption came from tourism and a few of the service sectors, which didn't fuel internal consumption, right? For us, internal consumption is growing, and its overall consumption is more than double from 2 million to 4.9 trillion by the end of the decade. And why is that happening? This is India's income pyramid, right? If you look at what was the income pyramid to what it will be in so look at this decade of 2020, 21 to 2030 to 31. You'll have a significant number of people who are going out from what we call as the aspirers to the middle class, right? Significant amount. Next, right? The global cues of what is happening is we need to focus on infrastructure, both physical and digital. So if you look at the current allocation this time, look at agricultural, education, health, you'll see almost all of them are the same, except for one key area, which is transport, right? And you'll come to that in a minute when you start looking at the allocation that has been made to railways, the allocation that's been made to JAL, which is waterways, ports and waterways, and the allocation being made to road, infrastructure, core infrastructure allocations. Okay? So the process seems to be very, very clear. If there is expenditure that is being looked at like an MNREGA kind of a process, which means money is going in directly as an expenditure piece, the process seems to be focused on DBT. That means it has to reach that 10%, go on to direct beneficiary transfers, right? Significant stoppage of all leakages in the system by doing so. If it is not, then focus on the infrastructure side where you have better control over spend, on the capital side where you have better control, right? So why is this important? Is that for us to reap what we keep talking about as demographic dividend, you have to realize that we have this growing population who are in this particular side. That's on the left-hand side is male and right-hand side is female. So pink is female, blue is male. Look at those three graphs and you'll know very clearly where we are going to grow in our ability to not just earn, in our ability to consume. Right? Important, because consumption drives some of the other things that you see when you come to the economy. So what are the key things? I started by saying I like this for the country. So what are the key things that I like? We can debate on a lot of things that was not done. I don't like a lot of the things that was not done on ESOP. Don't like it that they didn't make any provisions for some of the startups. I don't like some of the issues associated with angel tax, right? I can give you a whole litany of things that I don't like as specific pieces. But there are a few things that we should go back and look at. First, this is what I call as mindful expenditure. And for those of you who want to understand, there is a statement that the finance minister made, where she said that the leverage that for every rupee that we spend on capital expenditure, we have a leverage of 2.45, and year 2 and year 3, we have 3.14 as benefit. Now we can sit and argue to say it's not 2.45, it has to be 2.2, 2.1, or it has to be lower. But fact of the matter is, capital assets piece provides leverage, whereas On the other side, where you have revenue expenditure, which means subsidy, does not give you leverage. It is money spent that you are not going to get anything back in return. Okay? So the second bit that I like is our fiscal deficit dropping from 6.4 to 5.9. Significant, right? It's significant, not just us as independently. Look at our neighbors. Look at Pakistan. Look at Sri Lanka. Look at all of the other people that you are seeing. Their fiscal deficit is actually going up.
Why do you compare the other countries? Because you are presenting for our country. Why you people
It is important because all my bilateral, all the trade deficits that I go through is dependent on some of the things that I have to do with that. It is very important. So for example, COVID did not just impact us, it impacted others also. How I have managed it is very important, sir. So if I were to tell you today, on a fiscal deficit perspective, we are better off than the US.
that part is okay, but do
Correct.
not compare our budget or our provisions to the other country which is already under problem.
No, but we are a global economy that we have to realize. That's not political.
1 year in advance, election. अरे कभी भी हम पूछे आप ऐसा ही बोलते हैं when he is giving a perspective I should also tell what is the defect.
No. So I can do only on India. The reason I'm comparing is because I'm looking at state of economy. I have to compare what is my. So if I take, let's say, take UK as an example, take US, I have no problem. But I'm telling you what causes some of the things, and I kind of started by saying I'll focus on the why. The what you can read it in Economic Times, sir. Both of us can sit and read. We can look at all of it. The speech is available for what? I'm focused on the why. Right? So the second thing I like, and we'll come back, if there is a mismatch on the likes, then dislikes, then we'll have that argument. Second thing I like is reasonable revenue projections. We are talking about gross tax revenues expected to rise at 10.5%. We've already seen that happen on the GST collection, right? Strong growth on GST collection. We also looked at inflation. Again, I refer to our neighbors because inflation is dependent on my petrol prices. Inflation is dependent on what subsidy I provide on food. Inflation is dependent on my CPI, which is my consumer price index, right? We are not going overboard on subsidies of petroleum, food, and fertilizer, which is an important process, right? I can talk about higher compliance, inclusive development, women in early Northeast Tier 2, Tier 3 cities. But I'll come back and work through this piece. On the left-hand side, what you have is where is the money going? Obviously, Ministry of Defense, although we have not made specific structures on that. If you look at the piece that is going in, I mentioned two areas. Transportation, I mentioned where we are going in. Ministry of Road Transport and Highways, huge outlay, right? From a capital outlay, we are up 33%. That's a 10 lakh crore, right? Railways takes 25% of that, which means 2.5 lakh crore goes into railways. Urban Infrastructure Development Fund, Tier 2, Tier 3, including what happens in Bangalore, is called out. Digital infrastructure, which is called, in our terms, it is called digital public good, is called out. And you have a credit to states where you have a 50-year credit-free loan, right? The intention is, again, to put money where the leverage is and not where the subsidy is, right? There is a few other things that come in. This is related to mostly our statement, say we are part of G20, we want to be green. I'm putting this in because, if you look at those, what was called as the Saptarishi model, if you see the piece, it's the Saptarishi model, infrastructure and investment, that sequence is mine, but the items are the same, right? If you look at it, I've resequenced saying infrastructure and investment is good, unleashing the potential is good, inclusive development, is good to a certain extent. We don't know what all has got inclusive. Reaching the last mile is good. Then green growth, youth power, financial sector, we still have to do a lot more to tighten up there, right? It's a lot more forward-looking, right? So, but one thing that stands out is, based on what data you saw on direct tax, on UPI growth, etc., one thing is very, very clear. India is establishing a digital public good framework. We have it as part of Ayushman Bharat. That means your medical records are there. We have it on the financial sector with Aadhaar and UPI. You will have it on your credit structure with an account aggregator, and with PAN card, and with whatever else is there. The cost of compliance, I believe, is going to drop. And not only the cost of compliance, the cost of secondary pieces where somebody is going to fake something, say fake a signature, go back, and enforcement is going to drop, right? Which is good for the country. Overall, it is good for the country, right? Now, all of this assumes two very, very key things, and that is where we come back. Can we manage this fiscal deficit? In my opinion, it's based on two very simple things. We have not done any allocation to MNREGA. We have not increased PM Kisan Samman. We are hoping that the demand is not too high. In some ways, the country is hoping that we do not have any other equivalent of Ukraine kind of an impact, because it impacts us on petroleum, on energy, it impacts us on fertilizer, and it impacts us on food. Three of the key things that we are going to base this on, right? But from a budget, there is one thing where I was smiling when he said there is no change in indirect, or very little changes in indirect tax. It's actually good for a country to have very little changes, because what industry likes is consistent and predictable, right? I need something that has to be consistent and predictable. This is what an industry likes, right? I've kind of covered the economy. I have to spend 2 minutes because I come from the investment piece. Technically, although we talked about startups, I don't think there's anything much in startup. I call it the light touch policy. There's very little touch, right? There is definitely the digital push, which is Agri Accelerator, National Financial Registry, and simplified. So this goes back to the PAN card as the base, right? You have the National Financial Registry, which I'm hoping will change the structure. There are some tax treatment pieces. I will not put too much onto that. But there is one piece that you have to understand. The private participation, I believe, is going to get better. I run a fund. I'm a SEBI-approved fund. Private participation will be better simply because now, as a person who is deploying funds in startups, my compliance, my way of predicting what I think is going to be the market reaction to it is much more predictable, right? When you're investing money, yes, you don't want volatility. You don't want very high volatility, right? This provides a low-touch, low-volatility pieces. I'm not going into specific things like GIFT, etc., because I think that's very, very specific to a few small sets of areas, right? But overall, from a country perspective, I think this is balanced because of those two things, right? Where there had to be corrections, I see some corrections, not too many changes, but fueling the growth that I think India is due for from going forward, right?
Thank you, Shravan, for the opportunity. I'm going to be a little outlandish in asking the questions to the panelists. I would say you all done very, very, very sincere work in analyzing the budget, and you complimented Nirmala Sitharaman, and rightly so. But all that is happening is only tinkering. There is no transformational change. Let me put it this way. As CAs, what are you contributing to the nation except analyzing some paper? There is no productivity from you. The same day, we have got the 3 lakh, 5 lakh income tax officer who is just pouncing on us what production they are doing? Can we make them do some productive work and contribute to the nation building? Another thing, we say only 5.4 crore people or 6.5 crore people are filing tax returns. Out of that, some exemptions, only 5 crore people are paying tax. Now, in nation building, why not the entire national population of 135 crores not participate? Some fellow from Pune gave a suggestion to the Prime Minister to introduce a transactional tax of 0.25%, 0.1%, which will rake in not 33 lakhs in 23-24, but 50 lakh crores. Why does this government not think about it? They are only tinkering. You see, every fellow is pouncing on the producer. Can we get out of that? If there is a transactional tax, and with digitalization, we are claiming that almost every transaction is entering into the accounting process. And Nirmala Sitharaman has also mentioned it. In that case, can we not make all these IT officers, all the chartered accountants, leave their job of analyzing paper and scrutinizing and pouncing on us and make them work productively and make all the 130 crore people pay at least a small percentage, 0.25% out of their pocket in nation building? What is your suggestion? Why are you people not suggesting this? Is it your self-interest that you want to continue in the profession again? Sorry for putting it so bluntly. Thank you.
Well, I'm not brave enough to answer that. But let me...
I'm sorry, with folded hands, I apologize, seek apology because I have been very, very rude, but facts are facts.
We are a country which respects every viewpoint, so I don't think within this nation, any viewpoint is not taken in the right spirit. Acknowledging the tone, the spirit with which you have talked about, I'm sure all of us at our individual levels, at our corporate levels, even at societal levels, all of us share that frustration that a lot more can be done. There is no denial to that. But there is also this fact that uneasy lies the crown, head which wears the crown. As a representative of aspirations of 130 crore people, any activity that needs to be done, which by any stretch of imagination can qualify as transformational, is also in some sense disruptive.
Yeah.
Absolutely. So at what point and how much disruption can we do? How many dream budgets can we pull out of the air? The way Mr. Manmohan Singh in that 90s pulled out something out of the blue which transformed the countries. We must admit that such transformational opportunities need alignment of many, many factors. Of course, at that point of time, it was a wonderful crisis where we were at the brink of bankruptcy. And at that point of time, things rallied, and what happened later is history. It's only about timing. So in terms of can we do it or can we not do it, I believe this country has the potential and capability to execute anything. But I believe we must also understand, respect the viewpoint of the people who are sitting in their hot place. And I'm sure they understand the ground realities and the timings much better. So without batting for the government or against it, expressing gratitude and acknowledging what is already done, let us continue to pursue and work towards what can be done transformational or even incremental. As long as it leads to progress and can fulfill aspirations, I think we must be embracive and encompassing in our thought process. Thank you.
Sir, you guys are very, very, very intelligent. You should find out what are going to be the pitfalls in this transformation, and you should suggest to the government. This is my humble request.
Yeah, Sampadraman sir, I listened to your words, but my submission is, it is not for debate. It is my thought, because we have come out of COVID. We have seen global recession. We have seen how our neighboring countries are going through. In that scenario, when a budget of 135 crore people of Indian aspiration which is the 5th largest economy. We want to go to 5 trillion economy. So it is the budget which can be tinkered only. It cannot be totally operational. So I think for that, this present government, which is presenting the budget from 2 terms, if they get more here, I think what your aspirations are can be met. Thank you, sir.
Go ahead, sir.
Sir, for a long time, as a country, we used to spend more in collecting taxes than the tax collected, right? This was until we brought down our base rates to a certain point. Right. Until then, so for those of you who are too young to know this, India as a country used to spend more in the infrastructure to collect direct taxes than the amount collected. Right? Let that sink in. To a stage where we are, in some ways, I believe the whole GST structure is the one that will at some stage morph into a consumption-based tax structure. Right? It's a journey. I believe we have, as a country, have taken that step. And I can have 5 different disruptive views, but one of the things I believe personally is that we are a democracy because we have to carry the people along, we have to carry the multiple sectors along, right? At times, I have also mentally debated, would we have been better off as a country where we could take a mandate and drive it through onto economy, right?
Right.
And you have seen shades
You
of
mean
it, right?
dictatorship?
Yeah. Absolutely, and in which case, please understand, the demonetization would not have been a debate at all, right? So, respect the views. I think all of us, all citizens, all of us taxpayers have to do our part, and I think the journey is just started, and this is the basis of our democracy. So whether we like it or not, the other side of democracy is a bit of compromise. The price for independence that we are paying is that we are able to compromise and get to an understanding.
Thank you, speakers, for your inputs. May I now request Mr. Swapnesh Maru, Executive VP, Toyota Kirloskar, to kindly address the gathering.
Good evening, everybody. Distinguished office bearers of FKCCI, my co-panelists, and the lovely audience present here today. It's very nice and brave of you first to go through the entire budget yesterday and then be brave enough to come back here, sit through the evening and listen to the gory details and still keep smiling. So the tenacity is well appreciated. A lot of what I'm going to talk today is going to kind of bounce off with what Ravi established, and in some sense I'm echoing what he already communicated. There could be a lot of crisscross, forgive me for that. As he very rightly pointed out, there was a time in this country when budgets used to be a big thing. There would be war rooms set up, there would be people sitting, you would be connected to your stockbrokers, you'd be connected to your head office. And the hype was so high, the stock markets would be like watching every minute announcement. And there used to be the finance, it was like a feast for the financial and the corporate planning teams. Today, and I say this with pride, the hype is out of the budget. Things are largely predictable. There are very few surprises coming in. And I welcome and I believe that this is a sign of maturity and acceptance of the fact that budget is just one tiny event in the activity of running this great country, which is a 24/7 process. So as we sit today and decide to talk about budget, we should not forget the fact that budget simply is an exercise at that point of time, and what happened before and what will happen from now continue to be equally relevant. So today when I talk about the budget, I will also try to give that perspective. I'll just leave this slide here. And it's important to understand, as we talk about the budget, it's important to understand why we are where we are. Very similar to what Ravi talked about. So if we look at the aspiration that we talk about, you talk about a 5 trillion, 7 trillion, 24 trillion economy. That's the Amrit Kal that we are talking about. You talk about the initiatives like Make in India, like the PLI. These are all things that we have seen. But equally true is the fact that last 4 or 5 years have been completely out of syllabus, completely unstructured in terms of where the global space has ever seen, right? They call them black swan events. I cannot think of any other period in history where in such a short span of time we have been hit with one event after another. And yet, with all this, with COVID, with the Ukraine war, demonetization even before the COVID time, yet we find ourselves growing at around 7% and still managing to keep the inflation levels around 7% right now. And if you think about it, this is in itself remarkable. How did this happen? I might be probably making many people upset, probably talking about the government in power. But it's very important to understand what we did right. And learning from what we did right is what we need to do towards the future, which is why this context becomes important. If we go back to the times of COVID, when the world was in an uncharted territory, every economy worth its salt had to first protect the lives of its citizens and then the livelihood of those citizens. And each one of them took one of the most known measures, which is to simply promote consumption. India stood out. India took a different path. Of course, we put money into the hands of people, but only to ensure that they had 2 square meals. That was to keep the livelihood intact and not to drive consumption and keep the corporates open. Instead, India chose a different path of trying to fund infrastructure, trying to spend on the capital account. And as we stand back today and watch the fate of these 2 events, countries which pumped money and drove up consumption today are sitting on inflation, which they are finding sticky to turn back. We, on the other hand, have got 7% growth and 7% inflation, which is by any standard not so difficult to look at. If for a minute we had followed the Chidambaram way, which was very successful during the Lehman time, where we actually created income, what would have happened in India is, given the supply chain constraints, you put money in the hands of people, the supply will not come up, the price would have gone up, incremental capacities would not come up simply because there was no supply. We would have found ourselves in a much more difficult spot. We must appreciate the foresight, the tenacity, and the capability of the leadership to do different, go against the global trend and do something different. And we must not forget that it is that result that we see today. So this is something which is very important to understand. As we talk about this budget and the future towards Amrit Kal, what are the problems that face us as a country? If you look at energy security and energy demand, and these are 2 very different things. For time immemorial, we have always been an energy-dependent country. 200 million tons of import is what we do annually. And our fiscal deficit, depending upon which year it is and how much of service exports we have, tends between 40 to 80%. That's the exposure that we have towards energy dependability. Energy security is a completely different ballgame. The current Ukraine crisis has shown us how dependent and how reliant is our economy on oil. 7 days without oil supply and we can come to a grinding halt. And the government understands this, which is why the concept of energy security at any cost becomes very, very important. Similarly, on the carbon emissions and pollutions, I'll touch upon this a little later. Infrastructure and, of course, collectively taking up the lives of the people has always been important. The economy and the budget, therefore, have to keep all this in mind. If you look at what is happening in India, and this is a very interesting and important structural change. As countries grow, normally the manufacturing GDP tends to stagnate and the service incomes or the service GDP starts to expand. we are probably one of the few countries in the world of any notable scale where both manufacturing and service will expand. The beauty about manufacturing GDP expanding is the domino effect which Ravi was talking about, which is why we are sitting, and like he very nicely pointed out, looking at the demographic dividend, we can believe, aspire, and be confident of the numbers of 5 trillion, 7 trillion, or even 26 trillion towards the Amrit Kal. With this background, let's look at understanding the budget from the industry lens. First, the conventional way of what does the industry need? We have to look at how the budget affects the demand and the supply side, how the budget helps to make companies and industries competitive, and the business environment. So I will quickly run through this without too much time. The bazooka here, of course, has been the capex. Now, why this is important is because, please understand, it was the same infrastructure spending which kept us on our feet when the world was in chaos. And the government has realized this and very prudently carried it, and a 33% increase is something unprecedented. To those of you who follow the Keynesian model of economics, where you create infrastructure, you create employment to create that infrastructure, you create income which is backed by an asset, not simply consumption, and that income will further drive up capacity. That's exactly the 1, 2 time, 3 time multiplier, the Keynesian multiplier that he was referring to. Similarly, he already pointed out a lot of this money is going into railways, which in turn creates a domino effect. We are talking about infrastructure projects. We are talking about urban infrastructure in Tier 2 and Tier 3. So the industry is going to be the biggest beneficiary of this kind of capital spending. Their capacities will ramp up, their employment will ramp up, they will create income, and the virtuous path of consumption backed by capital asset will be triggered or continue to be in motion at this point of time. On the supply side, not much of change in the budget. We continue to face supply constraints, but these are more structural, which is where the PLI is going to come in and help remove some bottlenecks. But here again, the government has shown a lot of maturity by not doing some quick fixes, which tend to be counterproductive. On the ease of doing business, which is the top requirement for any industry, once again, 42 central acts have been amended. The filing processes have been unified, and this is a big thing. And the last one, setting up of a single window IT system for various compliances would be dream come true. I don't know how long it will take to institutionalize this, but once this is up, please understand the level of ease that businesses will face rather than running into multiple windows. Coming to competitiveness, how to make industries competitive. Even here, while there has not been any specific plan, we need to look at what has been happening before the budget in terms of some small steps, RODTEP, which is the Export Competitiveness Driving Scheme, the labor codes, which of course have not seen the light of the day because of the budget, because of the elections coming. But once they come in, they will prove to be a very transformational piece of law, which can probably change the labor landscape for the next 2 to 3 decades. Juxtapose this with the national educational policy and many others. The youth of this country today, you people who are sitting here, who are the beneficiaries of the Amrit Kal, will see the combined synergy that such measures can unleash. A lot has been talked about government investments. But like Ravi said, there are green shoots now beginning to visible even in private investment. The crowding out effect probably is abating now. Slowly, if you look at the IPO reactions which were there last year and the money is being put on the table, the graph here kind of gives us confidence that 23 onwards, the private participation will improve. Already, if you look at it by sector, it has been a bazooka for infrastructure industry, still is already doing well. But if you look down, sectors like cement, pharma, capital goods will all start to join the party. And they by themselves can, when the private capital comes on, I think the power that it will unleash is going to be quite incremental. I will skip sector by sector except to touch upon MSME, where very interesting outlays, if you look at it, 42% is the kind of jump that MSME outlays have seen. By no means this is insignificant, because please understand, This is one of the biggest contributors to GDP, biggest contributors to employment. This is that silent majority who has borne the brunt of the bad times, and the government has noticed this. So there are various acts, I will again not go into detail, but this is going to be very, very positive and accretive for MSME. Can we do more? Can we do transformation? Yes, of course, there is always room for more. But we should not lose sight of the fact that a lot has been done, and the thought that government is watching this sector closely is very heartening. I will kind of skip into these areas. Let me now touch upon one very important aspect that this budget has not missed. When we look at global trend, there are three big factors which are happening across any economy in the world. I've listed two here, but actually there are three. The first factor is any economy worth its salt is going through an energy transformation or transition to reach the net carbon zero goals, whatever goals they've set for themselves and whatever are their commitments. Secondly, the power of digitalization is unleashing disruptive and constructive forces which are dynamically reshaping the economies of scale and efficiency in any country. And last but not the least, I've not mentioned it here, but the global supply chains are getting realigned, no longer basing themselves on the efficiency or optimizing cost. Global supply chains are rearranging, looking at dependability and predictability. I've kept that piece out, but these two factors are going to be trends which define the leaders of tomorrow. And on these two areas, let's see how the budget is done. Very quickly, starting with energy transformation, this, I believe, is going to be the pot of gold for the next 2 decades on which this great country is going to thrive and get its GDP kick. Already the government has recognized this, and even 2070 may look distant. But if you look at the Panchamrit, the 5 commitments that PM Modi made by 2030, 50% electricity from RE power, we were next to nowhere on this percentage, and the various other measures, the amount of transformation that this will bring is unimaginable. It can change the lives of people, lives of country, and the entire energy security and the energy dependency piece will dramatically turn around on its head and create prosperity of scale that we cannot think of. Very simply putting this in perspective, and I'll leave the BEV for the timing because all of you would have followed this space very closely. But if you look at ethanol, today we cannot completely rule out the fossil fuels. But by blending sugarcane, ethanol, you can bring down the consumption of fossil fuels. Similarly, the compressed bio-natural gas, which has been extensively talked about. And last but not the least, the fuel of tomorrow, the fuel of the future, hydrogen, is already recognized by this government, and extensive steps have been taken to begin work on this. So again, what does this particular budget do on this global mega trend? Again, lot of things, the green hydrogen mission, of course, announced before the budget, but a lot of capital outlay, across sector focus. You name any piece, you talked about battery electric, there has been announcements. You talk about bio-CNG, there's been a lot of activity done. You talk about hydrogen, of course, a huge PLI in the pipeline has already been allocated. So this is going to be one transformational activity where the government is not just tinkering, but it is clearly reading the tea leaves towards the future and taking very concrete, definitive actions, and we should recognize this trend and be thankful for it. On the digitalization, again, what this particular budget may have talked about, the power of that transformation is not fully understood. Like Ravi was saying, probably we are one of the first economies globally. As it is, the Indian economy, the Indian government, and the Indian people are very, very receptive and adaptive for digitalization. And in this background, sponsored by the government, the kind of transformation that we have seen is already visible. This is just the beginning. We are one of the few countries to actually talk about the national data packet itself and the amount of power that it puts into the hand of people, entrepreneurs, government, which can be leveraged using the entrepreneurial spirit. The animal spirit which we are seeing can be indeed transformational. this budget has begun to talk about it. It has taken the first steps, but these are very important steps which can transform towards the future. Just take a look at these particular numbers. Trust me, they can shock and surprise you. If you look at ethanol capacity, a country which is completely dependent on fuel, we are talking of scaling this up 4 times from the current level by 2025. When it comes to battery charging points from the current level, we are going to scale up 12 times, right? When it comes to renewable solar power, we are talking about a 3 times scale up. For a country of this size, to scale up with this speed, if this is not transformational, I cannot understand what is transformation. Similarly, if you look at the digital transactions here, scaling up at 5 times. So when I look at these numbers, when I look at what we have done, when I look at what we are talking about doing, we may not notice the pace, we may not see it happening in front of our eyes, but trust me, we are looking at a nation which is awakening to its power. You, the youth who are sitting there, are in for a ride of your lives. Let's join this journey of transformation with belief and hope in our hearts that change will come and we will be that change. Thank you.
Thank you, Swapnesh sir, for a really enlightening and thought-provoking talk. Friends, we will now move to the panel discussion. While we have a few set questions targeted at few specific speakers, we will also be open to taking up questions from the audience present here. My first question would be to Mr. Pankaj. Pankaj, in the budget that was presented yesterday, there was one very important proposal which said, if the aggregate insurance premium that is paid by the assessee exceeds 5 lakh rupees, I repeat, if the aggregate insurance premium that is paid by the assessee in a particular year exceeds 5 lakh rupees, then the amount that will be finally received in the hands of the assessee will be taxable. Can you please elaborate on this? I mean, because will insurance be lucrative at all? Will people really go for insurance policies in the future if the sum assured is taxable? AV room mics, please. Enable the mics, please. Yeah.
So my view on this is that in India, we have looked insurance as a investment and a return kind of a instrument. That's not how really insurance is looked at. Insurance is basically you pay a premium so that if something happens, you get something in return. But we are used to, thinking that if you pay and if I get nothing in return, then it's not good. So that's how we look at it. So that's why insurance companies also in India have always come up with the schemes or policies which give you a return rather than giving you a high risk cover. So if you really take a pure term insurance, and you are a financial planner advisor or two, so maybe you will be able to better explain it. When you take a pure term insurance, you pay a small premium, but you get a multiple times of a risk cover. But when you take an instrument which is going to give you a return in terms of after a specified period, you won't get a high risk cover, but you will get a return. So the thing is, because this return which comes is tax-free, right? So the insurance companies have come up with schemes which give you a very less risk cover, but give you a return with a guaranteed kind of a return plus a bonus kind of a schemes. So that has been misutilized. There were earlier insurance which were like a 3-year insurance or a 5-year insurance, which used to give you a fixed return kind of thing with a very low risk cover. So I think that is being discouraged by the government. So people who still want to go, you'll have to segregate this two and look at it. For insurance, if you want to go, you better go for term insurance. And if you want to go for returns based on for your investment or future returns, then you make investments. So if you club this both two, government feel that there is people who are taking advantage of it and not paying any taxes on the returns what they are getting. So now, so they have put up a limit. Up to this small limits, we are okay. But if you're going to take an insurance and you pay 1 crore premium and then you get after 5 years 3 crore of tax-free return, that is what the government wants to discourage.
Thank you, Pankaj. But I think under this particular proposal, in case the sum assured is given into the hands of the policy holder, because of the death of the policy holder, I think that is still outside the taxation.
Yes,
right?
yes,
So
that is
is still not taxable.
That's
right?
true.
And also this, most of the proposals come into effect from the 1st of April 23. So all the policies taken until 31st of March 23, I think they also kind of circumvent this.
Yes, I think this is a very good thing about this government that, Arun Jaitley, the finance minister who presented in 2015 budget, he said that we are not going to make laws which are going to go retrospective back to 1961s or earlier years, because that doesn't give certainty and it's really tax terrorism. So most of the laws that are coming are prospective. So this is, if something has happened in the past and someone has taken the advantage of it, they will continue to have it, but in the future you won't be able to take it.
Thank you, Pankaj. My next question is to Mr. Deepak. I think you touched upon quite a bit on the impact of GST, but in a layman's perspective, I mean, most of us over here, right, we want to know, because of this budget and because of the amendments to GST, can you name few items which will become more expensive? Can you name a few products or goods which have become cheaper because of this budget proposals? What has become expensive and what has become cheaper?
Thanks, Shravan. Audible, right? Yeah, so certainly I think in terms of rate changes, had it been rate change with respect to GST, it would have had a mass impact. But the rate changes largely what has happened in this budget is with respect to customs duties, which only kind of targets a segment. And changes in customs are largely targeted, as confirmed by Finance Minister herself, that it is either to kind of promote domestic manufacturing or to kind of promote exports. So any changes in customs rate largely has been on that context. But yeah, in terms of the changes which have happened from customs duty and let's say central excise, one is, yes, there has been an increase in terms of demerit goods like cigarettes. So that certainly sees an increase in terms of, which has happened, not happened in the last two, but has happened in this budget that way. And certainly in terms of a few products connected with, let's say, there was a tinkering with respect to rate change as regards gold bars was concerned in the previous one, but not with articles made from gold. So in this budget, they have kind of brought that in line. So articles of gold jewelry and silver will see an increase in terms of, the intention is largely to kind of have restrictions for import of such finished goods coming from outside India. So I would say this is more to do with, it may not impact the rate, but it may be more in the nature of protecting the domestic manufacturers there. Then in terms of ones which have favored the industry, one would be, yes, there has been a change with respect to panels used for LED television sets. And maybe ethanol in terms of which may kind of impact lithium-ion batteries also, which has an impact with respect to certain segments where they have kind of used either in terms of, let's say, we have this data, what do you say, where, I mean, the mobile phone charging things or parts of, let's say, certain mobile phone manufacturing. So those segments will certainly see some kind of encouragement. But in terms of the impact, maybe it may not be as impactful had the change been with respect to GST is concerned.
Thank you. I think the moment that announcement on NCCD on cigarettes was announced, I think ITC was down by 6% in the next 1 minute. So yeah, thank you, Deepak, for that. Before I reach out to the other speakers, can we have some questions from the audience?
Yeah, thank you, sir. Firstly, I would like to appreciate each of the speakers for sharing their different perspectives and for an amazing analysis, and also for focusing on the narrative of bigger picture. So, firstly, I would like to ask a question on the direct taxes. We all know that the change with respect to personal income taxes, with like increase of limit of income for the rebate from 5 lakh to 7 lakh, is it actually substantial and fair to the taxpayer? Like, yeah. Because in the old regime, if at all my gross total income is around 7 to 8 lakh, I have different sections like exemptions as well as deductions where I could take and still I could claim that rebate. But in the new tax regime, it's just that the wordings are very attractive that, 7 lakh is the limit. But did this change, is it actually substantial, and kind of advantageous to the taxpayer?
Yeah, I agree that it's not substantial, but I mean, every budget, there is something to be given. I mean, so there is a small benefit which the finance minister has given. The good thing is, other than people who are having business income or professional income, they can't opt in and opt out. So you can opt in once and then opt out, they again can go back. But other incomes, if you have salary income and other income, you can opt in and opt out every year. So if you feel in certain years you are not able to make the investment, or you are not able to want to just take away more home salary, and those years you can opt out of or go to the new tax regime and take the benefit. Yeah, it may not be substantial, but yeah, there will be some taxpayers who will be benefited. There are taxpayers, suppose there is a family and there's one person in the family already making the investments, and the family, other person earning the income doesn't want to make the investment because there's already being something made. Yeah, so then they can take the advantage. So you will have to compare, but this also could encourage now more people to invest and do savings, because they will see that there is more benefit in actually doing the savings. So yeah, you have two options. You can pick what you, so that's the only good thing, that you have an option to choose, and this makes you think also. Otherwise you take it for granted. So now you make this investment, you go get this benefit, you will think also. Yeah.
So the next question.
Just to add, what's your good name, please?
My name is Sami.
In continuation to what Pankaj mentioned, put yourself in the shoes. Imagine you pass out your MBA course and then you got a campus placements with 7 lakhs of package, let's assume, right? Is it really fair that the government asks a person who's got a 7 lakh salary package to invest roughly 2 lakhs of their annual income? That is, out of the 7 lakhs, 2 lakhs you put in, LIC, PPF, NPS, etc., so that you save certain taxes, because your salary itself is 7 lakhs. Just because I want to save taxes, I am forced to put 2 lakhs in this. To that extent, my disposable income will come down. So imagine, without a force on you to make such tax-saving investments, you don't have to pay any tax at all until 7 lakhs. Look at it that way.
Right.
It really works wonders for that kind of class. So that's why this proposal is specifically targeting the middle class. Yes, more money, more disposable income in the hands of the middle class people, so that they can decide where they want to spend the money on, rather than forcing them to invest in tax saving avenues. Go ahead with your second question.
But do you actually think, because of this budget, will there be any substantial change or increase in the tax base? Because I'm sure every budget, one of the major objective is to actually increase the tax base. So do you think this budget would result into that? And if yes, how and how much it could be?
So I think probably from budget's perspective, there has been a clear proclamation stating that digitization is the focus from government's side. And more and more in terms of the way GST is kind of operated from day one, right? Everything has been digitized, electronic. And the kind of information powerhouse which government has, it's also using them, right? Not only to kind of check evasion, but also to ensure compliance, right? So if you see at the time when GST kind of came in, there were 70 lakh registered assessees, and now you have about 1 crore 40 lakhs. So the fact that it doubled basically showcases not that, yes, from a revenue perspective, it has increased, no doubt on that, but it also has ensured people who were actually liable have kind of come into compliance. And that has kind of been direct result of from a digitization and digital information which government has to its kind of advantage. And maybe from not from the budget, but I think the focus of GST is to kind of ensure that use of this digital information is not only to kind of, in fact, one of the amendment also talks about sharing of the information, right? So one is in terms of government's perspective to kind of share the information under GST with other regulations, which could be income tax, or maybe now the fact that PAN is kind of getting the common base, right? So that will become a trigger to kind of see if there is some kind of, let's say, earnings which under that particular PAN, it is kind of linked up with the compliances under other statutes have kind of come in. So certainly the ability to scrutinize returns and the way in which the base, in terms of your question was to kind of ensure the base increase, right? Certainly I foresee that in the years to come, government would actually look at tapping not those assessees, because anyways the stress and compliance each of us actually go through in terms of that way, like either in terms of industry kind of ensuring compliance, or in terms of consultants to kind of ensuring that the industry complies. But certainly from what do you say, assessees who are outside the target net, right? So more and more this information, the digital information, will help the government to kind of get them onto base, and that is where we can kind of look at both in terms of direct or indirect tax rates to kind of come down. So that will be the clear focus here, and digital will be one prominent or important way to kind of get that tax base increased.
Thank you, sir. Do I have the option to ask another question?
We'll get back to you.
Yeah, okay, sure.
My next question is to...
First of all, with due regards and respect to the Honorable Finance Minister, Madam has taken good efforts, a good homework, discussing with the appropriate authorities to present this budget. As a women employee, or as a women this thing, I really proud that, because nobody might have thought of all these things. Each one can understand what exactly. Maybe I'm not an expert in chartered accountancy field, but still the way it was simplified, even a layman can understand. In the means, and then that is what I'm telling you. I've come to that question. Because now, after going through all the deliberations, just one simple thing I could not catch it. Earlier, we used to have some women employees, some rebate was there, some discount was there. It is not been pointed out. I think, is it eliminated, or there was?
There is a woman saving up to 2 lakhs, 7.5%.
Okay, thank you.
Madam, so one of the proposal that was, part of the budget yesterday is, there is a specific scheme for women, which is kind of in line with the existing Sukanya Samriddhi scheme, wherein up to 2 lakh rupees, primarily for those in the tier 2, tier 3 cities, 2 lakh rupees if you invest in that particular scheme, there is a fixed rate of 7.5% interest. So this is the only women-centric proposal that has come, and nothing specifically as any further rebate or anything as such.
No, the question what I wanted to ask you specifically, women employees who are working in the government organizations, we had some, I think, preference was given for the filing.
Yes, you had a slab rate which was little higher. That has been removed, I think, 2 years back. That slab rate benefit for specifically for women has been removed.
That point is not touched here.
Yeah.
Okay, that's all. Thank you very much.
Thank you. My question next is to Mr. Ravindra Krishnappa. Sir, you also mentioned that for the government, the elephant in the room to be addressed immediately is definitely inflation. If you put inflation on one plate and growth on the other, I think people want to address inflation first, because that is the root cause which will solve a lot of other issues. So do you think, of course, there are global issues that are impacting Indian economy. Do you think the inflation at these rates, as well as the proposed rates for the next year, is likely to result in a recession in India?
Unfortunately, this has to be a it depends answer. Simply because you are working with what facts you have on the table, right? And as I said, if you remember what I put out, there were 2 things that I talked about. Expenditure, we are hoping that the trigger on the leverage kicks in, right? Which means that it's not a subsidy, which I don't hope to use on the expenditure side. All the capital infrastructure related piece. The second piece, I don't know if you noticed, is our revenue base is growing dramatically, right? So what does this do? This allows you to go back and have RBI have a bit of flexibility on where they are going to peg the interest rate, right? So if you look at the overall market to us, our interest rates are now going back to pre-COVID levels. Our collections have all been pre-COVID levels. So assuming that the COVID 2 years was an aberration and we don't see anything related to equivalent of Ukraine, I am very optimistic that we are not going to hit any of those pressures. Simply because the trend pre-COVID, the 2 years trend pre-COVID, we seem to have seen a gap in time and things are going back to the pre-COVID structures when you look at it. So structurally, expenditure, revenue, growth in whatever we are seeing, savings piece, the healthy balance sheets of all the corporates. In some ways, I think Swapnish can validate. I am hoping that if we go back to that kind of a pre-COVID level and that kind of a structure, we are clear out of this piece because that will let us sail through.
Great, great. I request our senior VP.
The question is like a taxpayer. We have got old regime and new tax regime.
Right.
Old tax regime, there is a deductions. Nothing but savings. In perspective, as I am looking as a middle class, common middle class, even though there were deductions, I used to put in some 10,000 LIC, some 10,000 PPF. Like your debate came up with the 7 lakhs cap, where you said at least there is some money which you can spend. But I am going to suppose we had a crisis all over the world in 2008. This saving culture of India survived India. So this tax regime of deduction, which will help them in their, suppose they savings for about continuously for 10, 15 years. In the family which there is any for college or something, marriage or housing, that will help them. But now we are going from shifting from the saving culture to the new tax regime to an expenditure. I think that is my point. Is that correct, what I am thinking?
Yes, sir. So you're saying disincentivizing tax-saving investments can be a boon as well as a doom. So in the long run, you are saying that will have a lot of impact on how the economy responds to global challenges. Would Swapnish sir would like to take this?
Audible? Thank you. Thank you. Boom or doom? I think the perspective here needs to be slightly different. While it is a fact that whatever we have achieved until now is largely because of the saving potential in the which has been at a household level, and that has kept us intact, no doubt on that. But what we are also seeing today is a generational shift into the youth of tomorrow and today. My time, your time maybe, was a point where our parents worked themselves out to give some tangible assets to us. We built on them. And today we pass on to the generation a big domain of financial security. So the generation of today does not understand the need or recognize the need for such structures. Their lifestyle is different. They want to change car in every 3 years. They're not interested to even drive. They want to take vacation and invest in experiences. So this is a very intuitive thing. I mean, is it right or wrong? Only time can tell. I'm sure there'll be a lifestyle rearrangement 30, 40 years down the line. But this is a trend, and that trend naturally gets reflected into the spend or save kind of a culture. So I think we should just take it as organic reality, mirror that, and then tailor our policies accordingly.
Thank you, sir.
Can I ask one question?
Yes, yes, go ahead.
Yeah.
Yes.
See, this is basically, see, in the last 1 or 2 years, we have been having a feeling that the flight of capital or the foreign remittances that has been going on. Now, the Honorable Finance Minister has introduced that foreign remittance tax of from 5% to 20%. But at the bottom of it, am I audible?
Yes, yes, you are. Go
At the bottom of it, she says, go back to your returns to claim the refund. Has she been achieved in her this one target? See,
so
from 5%,
I understand.
yeah,
I understand what you're
working
through. So two areas I think you need to go back and work through. There are two components to this transfer. If you look at it from an economy perspective, there is the ODI, which is direct investment abroad, which has traditionally meant that you had to go get a valuation, or you have to go to RBI, get an approval, and transfer that money, right? So I'm keeping ODI out of this discussion that I'm going to answer, simply because what people may not know is that RBI hit the ODI limit for a lot of transfers that they had put out way earlier. In fact, RBI has been not allowing some of people like us who have investors to invest abroad. Logically, we can, but they have been withholding these approvals. So that is on the ODI side. The one that we are talking about, just for clarification, is under the LRS scheme, right, which is the liberalized remittance scheme, where each citizen or each technically PAN holder can transfer up to $250,000 US without approval on a case-by-case basis. That used to be used for 3 or 4 purposes. First, it used to be used for what we typically see as education, what we see as medical expenses. But it was also, the feeling was that it was also being used as an aggregation to go and create assets or take citizenship or a green card outside of the country. So you had the Dubai announce something called a golden visa. You can go look it up. I don't want to go back. You had US create something called an EB-5, which meant that if you're willing to invest a certain amount in the US, within US soil, then you would get a fast track to citizenship and green card, right? So a lot of what you see here is to kind of disallow that kind of a flight of capital. So if you look at the fine print, medical expense is still exempt. Education where you have taken a loan, let's be very, very clear. Education where there is a loan is at 0.5%, if I'm right. I'm sorry, I don't, yeah. So it's all the people who are trying to do this piece where I was allowed 250, my wife, I could have picked 250, my 2 minor children, I could have put 250, and together I could have put out $1 million. That's the target, according to me, because that is flight of capital which is not invested into India as the country.
Sir, so much has been spoken about one district, one product, right? So I want to understand, has this really been beneficial at all to MSMEs? What do you think?
I can't answer this with hard data, but I'll answer this with the experience that we have seen. So we are an automobile company and we have a plant in Bidadi, right? And for those of you who are uninitiated, Bidadi used to be a very sleepy township outskirts, right? It was never really considered a part of Bangalore. We've been here for 23 years in terms of operations now. We conduct, over a period of last 3 years, 4 years actually, we conduct a biannual event called Hasiru Sante. That means a green market or green fair, right? And the proof of how successful this has been, and that directly goes to, one district, one product. The kind of people who come to such community markets, say 4 years back, this scheme probably came in 2020, if I'm not mistaken. And very interestingly, anecdotally, this scheme is based on a Japanese concept, which was way back in 1970, right? So once the scheme came in, and I'm not saying the people who came in were aware about this scheme, but over the last 2 years, we are seeing a lot of young entrepreneurs, women, coming out with really niche products, which you might not even have known existed in that area. And it's not a business for them. So passionate about preserving their way of life, preserving the art that they have come up with, and still make a commercial success out of it. And few of them have also told us that they have got export queries. Some of them have, the entrepreneurs in them have tied up with these local platforms, And you will see some very unique products being sold on Flipkarts of the world. One simple example, I am from Gujarat. There is a small district called Bardoli. You might not even have heard it. There is a local delicacy which is available only locally. Nobody even knows about it. Today, Google it, it's on Amazon. That particular savory is available for anybody to buy in the world, and it's branded as Bardoli XYZ. I think that's the proof out there. I might not have data, but I believe given the entrepreneurial spirit and the huge local, hyper-local specialities that we have, this is one scheme which is bound to succeed.
Thank you, sir, for beautifully putting in with the help of your experience.
If I may add, I mean, the finance minister also announced that all capitals will have a unity mall, which will promote this one, which will sell this one district, one product products.
Right. Definitely, that's a good move. I think all the capital cities will have a unity mall. Yeah, last question, please. Yes. Go ahead, sir.
Let's understand, not all of budget has to be economic. Right? To me, this is a signaling on identity, which you have to think beyond the money terms, right? I just wanted to add the point. In a budget, we shouldn't look at everything from a pure fiscal perspective.
Definitely, yes, sir.
Yes, I'm Lokesh. I'm from Soundarya Institute of Management and Science. Not only me, almost 550 students and my faculty members, we came here. And first and foremost, I extend my gratitude to FKCCI and Accolade. My simple questions, our budget, total proposed budget 45 lakh crore. And we are generating the income almost 26 lakh crore, in between 18 to 19,000 lakh crore, which we are going to borrow. So physical deficit, it was, in the previous one, it was 6.4. Now it is 5.9. And subsequently it will go 5.2 something. See, our borrowing, we are borrowing more amount. Maybe earlier it was 7.5 lakh, now it is a 10 lakh crore. Overall 19 lakh crore, right? So our borrowing is increasing, and how it is going to decrease the deficit, that I want to know from any one of the panelist member.
So one of my slides had it. I'll defer to the more financial experts. But very simply, deficit is where my expenditure is higher than my revenue source. Right? At a very, very high level. Let's only talk about that. COVID created a deficit where the government had to borrow. And the borrowing went all the way where our fiscal deficit was 8.6, if I remember right. Correct?
Yes.
8.6. So from 8.6, the target is to taper down as quickly as possible. Right? So there are only two ways that you can do it. One, you have to reduce your expenditure, which is why in some ways I think there is more money going into what I talked about as the infrastructure side, because that is hoping to leverage. That means I spend 1 rupee, next year that will give me back 1.24 rupees or 1.5 rupees, right? Not like a subsidy where I don't get anything. The country doesn't get anything back. It is spent and gone. So that's one. That means I'm using this as a leverage. So next year I can reduce it from what you talked about as 5.9 to 5.2, right? I have to target is to get to 0.7 next year and another further 0.7 to get to 4.5. That's the piece. So first is by reducing your expenditure or repurposing your expenditure. The second thing which I put up, which I'm very, very hopeful for, is our revenue is growing. That means tax collections on GST. We have had a record GST, second largest GST collection for January.
Yes, right? 1.53 lakh crore, I think.
That's been since April 2022, that's been the highest piece, right? Now, when your base is growing, and that means your revenue is growing, you can take the risk, is what I would say, right? Which is, if you do anything beyond that, then you have the trouble of what Shravan was talking about as inflation, right?
Yes. Thank you for that answer, sir. Just to add on to what
just a minute, sir. Just one small. Actually, whatever they are investing, that's fine. We are investing almost 2.78 lakh crore for the roads and all. See, okay, fine. It's fantastic. We want highways, roads, and everything. But roads and highways and all, it's not a permanent. After 2-3 years or 4 years, again they have to repatch, rework. I mean, if you invest more on the roads and all, I think, is it the permanent revenue for us? I think this is the question what I am going to ask you. If you invest on the permanent, maybe 10 years, 20 years, that's fine. If you invest on the roads, maybe you know that within 2-3 years it's going to repatch.
Sir, this is so you have to understand that when I say road, don't think of it as BBMP.
No, this is the example.
Creating a road that has a pothole next week.
Yes, sir. Yes, sir.
It's a employment. So let's only talk about.
Yes.
When I invest in a road, that money is not going into the road.
Yes.
That money is going into the material going to make the road. That money is going into the labor that is going to go back and work on the road. That money is going to, so the money that you invest is going into the factory that is generating the necessary raw material of bitumen. It's going to employment of those people who are making bitumen. It is going to the one level behind to wherever you had as the petroleum. Similarly, if you had put the money, the person who was riding that road roller gets that money then gets spent back in the economy.
Employment is coming.
Yes. Yes, sir. Thank you for giving me an opportunity to ask the question. Thank you very much.
I'll just add to Ravindra here. Now, see, just imagine Pakistan going and asking for loan, with India kind of asking for loan, right? So naturally, the person who's giving the money looks at repaying capacity, right? Now, the way India has kind of, I think Shravan in his opening remarks also said, where we were top, I mean, from bottom we were 5 to a stage where we are 5 from top, right? Itself showcases how India is investing to kind of ensure that its GDP, I mean, from a number perspective, we are in the growth. I think all of us are kind of trying to kind of give those indications, right? We are number 3 in terms of mobile phone manufacturing, right? We are kind of, I mean, if infrastructure is not there, we cannot have global companies look at India from kind of setting up large manufacturing facilities, right? So therefore, these are long-term strategies which government is kind of looking at, as Ravindra also said, right? While revenue expenditure goes off in the year in which you're spending, capital expenditure has the capacity to repay back more than what is invested, right? So there is where. So I'm sure the way, nothing otherwise, I mean, for or against this government, but the way the last many years, the track record of ensuring that this investment leads into safer returns, right? I think the person who's kind of giving, I mean, even if it is 10 lakh crores or 18 lakh crores, I'm sure the person who's kind of giving in knows that this will kind of come back for him, right? So that's where I would want to kind of just give an indication here. Sorry.
So just in jest, right, to humor, most of your students would not even know of this person called the person who did a whole lot of loan waivers in Karnataka. Can you name? Yeah, can you name the person? So the issue with that is you are a populist piece. You are buying the votes that you are going to work through, but it doesn't help the economy in whatever shape and form.
Thank you, sir. I think talking about the road and infrastructure, it reminds me, somebody was saying the US economy is the most developed country in the world and that is why they've got really good roads. But somebody corrected him, just because they have really good roads, it has become a developed country. You know, it's the other way around. So this is where we conclude the session, ladies and gentlemen. A huge round of applause to all the speakers. May I now request Mr. Harshad to kindly come forward and present the formal vote of thanks, please.
Private Limited and IndiaGST.com app and website. Mr. Pankaj Sancheti, founder, Kevalin Consultants and consultant at Accolade Advisors. Mr. Ravindra Krishnappa, Managing Director, July Ventures. Mr. Swapnesh Maru, Executive Vice President, Toyota Kirloskar Motors. Mr. B.V. Gopal Reddy, President, FKCCI. Mr. Ramesh Chandra Lahoti, Senior Vice President, FKCCI. Dr. C.A. I.S. Prasad, Immediate Past President, FKCCI. C.A. Shravan Guttur, Chairman, Central Taxes and Corporate Tax Committee, FKCCI. Past Presidents, Managing Committee members and members of FKCCI. Press and electronic media, distinguished invitees, my colleagues, ladies and gentlemen, it gives me an immense pleasure to extend a hearty vote of thanks to the speakers and panelists of this session. We had a wonderful sessions, and all of them shared their valuable thoughts within one day of getting the budget. So I thank Mr. Pankaj Sancheti for enlightening us with major direct tax proposals. I also thank Mr. Ravindra Krishnappa, Managing Partner, July Ventures, for briefing us on macroeconomic analysis and how this budget is future-centric. I also thank Mr. Swapnesh Maru, Executive Vice President, Toyota Kirloskar Motors, on giving a perspective of this budget on the industry. So how the industry looks at this budget. I thank you, sir. And my special thanks to CA Deepak Kumar Jain B, Founder, Accolade Advisors, for briefing on major indirect tax proposals and also co-sponsoring this special event. I thank all the invitees and members who are present here in person and also joining us virtually. And I'm confident that all of us have learnt a lot through this session. And after having heard all the dignitaries and speakers. Thank you all. Thank you, Shravan.
Friends, high tea is arranged. It's a networking high tea. Request you to kindly have your refreshments. Thank you, everyone.